Joining us now with his view on the Fed and the central bank's market impact, Steve Eisman, Senior Portfolio Manager at Neuberger Berman. And we've had you on enough that I'm always a little bit hesitant to try to ask you for big picture, top-down analysis, because a lot of times you don't really want to go there.
I actually have an opinion on this one.
Good. You have an opinion on this, but I'll just start by saying we're in kind of an interesting environment where we're definitely worried that the economy, for Fed reasons and for Fed cut reasons, we're worried that the economy is staying strong and that inflation.
I think it's more than staying strong. It's actually, I think there's been a reacceleration.
But we're also worried that there's going to be a recession because the Fed is going to have to engender one to tame it. So we're worried about the economy's too strong and there might be a recession. So
everybody's hoping for a little bear's porridge.
Exactly. Right. Something just right. Because we're worried. And has that ever happened? Can we really orchestrate that?
Yeah, we have it right now. Everybody should just relax.
So is that your view right now?
No, my view is I feel that ever since Greenspan was in charge of the Fed has always been extremely insensitive to its own impact on markets. And, you know, when Powell said, I think it was last week, it feels like an eternity ago, that financial conditions are tight, I was like, what planet are you on? So, I mean, my view is the economy's fine. There should be, I personally think there should be no Fed cuts this year. And, you know, the market will do whatever the market does, but the economy's fine. Why would you cut? You know, my actual fear is that if the Fed were actually to cut rates, the market goes into it becomes, I guess, bubblicious. And then we have a real problem. So, you know, things are good. The Fed should do nothing and wait for data to get weak. Because there's no weak data.
We still argue about, do you look at rates in absolute terms or do you look at them as,
you know, that debate bores me. But
in absolute terms,
really
they're not. In absolute terms, they don't seem high. But they're up 500 basis points.
So what? And has anything bad happened? Nothing bad.
No, that's
happened.
what I mean. I remember 7 and 8%, and businesses did just fine.
So the economy is good. I actually think, like I said, it's reaccelerated somewhat. Why would you? On what basis would you cut rates?
Some people think that the shock of 500 basis points is dislocated.
Yeah, well, they've been talking about that shock for the last 2 years, and the economy stays fine.
So what's causing the Fed to talk about 6 rate cuts 6 months ago?
My personal opinion is I think Powell is deep down is just a dove. He's always been a dove. Raising rates was out of character for him. He had to do it, and he wants to cut rates. But at this point, you know, not that anybody ever calls me, but, you know, I would just do nothing. You know, why would you do something when the economy is fine?
You don't think we need to raise?
No, I don't. But actually, my fear is that if they cut, then eventually we'll actually have to raise. That would be the worst possible thing that could possibly happen. So, you know, one of the things I've learned as a portfolio manager is maybe the hardest thing to do as a PM is to do nothing. Because it's so easy to actually do something. And it's the same thing with the Fed. It's so easy to do something. They could cut whenever they want to cut. The hardest thing to do is just to sit back and say, okay, everything's fine. Let's just sit and wait. And if things get a little weak, then we can cut.
You don't think there's, you said bubblicious. Are we pre-bubblicious yet? I mean, we're getting it.
I mean, look, the market, but the fundamentals are really good. You know, one thing I always think about is, you know, 1999, 2000, when the market definitely was in a bubble. But what killed the bubble was not that it was a bubble. What killed the bubble was that the Fed raised rates a lot and put the economy into recession. It was the recession that killed the bubble, not that it was just
so what do you think is driving this economy, though? Is it new productivity gains that somehow AI is coming?
I think the two big things that are happening right now. No, I don't think it's the liquidity per se. I think it's real fundamentals that there's real AI, there's real investing, and there's tremendous amount of money being spent on infrastructure. And there's still a shortage of jobs, so the consumer is fine. It's a nice, you know, it is you know, little bear's porridge in a way. So why would you spoil it by raising rates, by lowering rates?
But just going back to like 2000, like the idea of a bubblicious situation at that point. You said it was the Fed raising rates that made it. I mean, the Fed raised rates and then made business models where you were making no profits.
Right, but today, the companies that people talk about are real companies that have real revenue. that have real earnings. I mean, look, Nvidia's
Agreed,
earnings
but
have
I'm just
tripled.
saying that it wasn't necessarily the Fed just raising rates. The Fed raised rates, and then it was
No, but then the
situation where
economy
those dumb
actually went
business
into
models
recession,
didn't
and the
actually make
speculation
sense.
went out of the
Can I
market.
ask a question that may seem political? We are in an election year.
Yes.
And depending on the political channel you watch, you might be told that the economy is terrible and that folks are spending, inflation is run away,
right.
Costs of everything are up, everything is, the sky's falling.
Right.
And then I'm hearing you, as someone who's in the markets, say the economy is great and that this is actually like a Goldilocks
Please
moment.
don't say that word Goldilocks. It's very sensitive.
Whatever you want to call it.
Little bear.
Larry Kudlow used to talk about that. He used to drive me nuts.
Whatever you think this sort of moment is, and I'm hoping that you can square the circle, if you will, of how these two ideas could exist, unless you just believe that one.
Say the Biden economy is great and it's not getting credit. It's really where we head with many guests.
But it's fair. It doesn't get credit. I mean, look, the unemployment is really low. Wages are still going up.
Wages are just finally going up. To
Right,
where
for the last
people,
few years.
They're below, people's spendable income is still below where it was when he took office.
That's
Average
fair,
weekly.
but the trend is up.
It has been.
And people still have savings. The only thing negative you could say is that there's been inflation, so some things are harder to buy But
Yeah, a little bit, 30%.
But okay,
Total.
that's fair. But inflation is starting to come down, or at least
it's not coming
flattened out.
The rate of increase is coming down.
Right. Okay. But
we're
wages are
stuck
still
with
going up.
30%. We're
All
stuck
I can
with
tell you is
30%.
that
Otherwise, you're calling for deflation, which would be worse.
I'm not calling for it.
No, I'm saying, but
no, nobody wants that.
Right,
But the price increases are in, and for everything.
That's fair, but the only thing I would just say is that there's no sign that the economy is weakening.
Right.
There are signs that the economy is getting a little
But if
stronger.
you're living on, if you're not lucky and you're not like us, you go to the grocery store and you're buying less than you did 3 years ago.
Okay, maybe. But still, things
That's a problem.
are still pretty good overall.
For us, things are pretty good.
No, for most of the people in the country, things are pretty good.
Why would it be good for most of the people in the country if they
Because
can buy
wages-
less than it was 3 years ago?
Well, it depends on what you're talking about. Wages are still going up. People are employed. There's a shortage
They're finally
of labor.
going up, but they're not back to where they were in real dollars 3 years ago.
Okay, so you can't have everything.
Okay, good. Let them eat cake.